Good afternoon. So today I took one loss, pretty much right about market open, and I just called it a day. So the trade that I took, I think, was a great setup. I basically just misplayed it a little bit. I had too tight of a stop loss. I didn't get a great fill because of the way that I chose to enter. So should have been realistically a pretty big win. Took the loss, and then realized that if I continued to trade, then I probably would have taken even more losses. So before I dive in, I just want to say that I think although I took a loss today, I'm red on the day. I did a very, very good job with my discipline, and I think today was a big step towards becoming a profitable trader. I think any day in the past I would have dug myself a pretty big hole today. Today was the recipe for disaster, but I pulled through my discipline and ended up just keeping it a small losing day. So going into the day, looking at the 15, so we were just kind of fading off of this 4 hour. We respected this fair value gap, kind of had your little like turtle soup entry here. Boom, this plays down. Then we respected this 15-minute fair value gap, and we're pushing further to the downside. So I was thinking we were gonna fill in this new week opening gap, possibly go take out this sell side level from last Friday, keeping in mind that we are coming into OTE of the range, but I didn't really care about that much. I was pretty bearish. So clean 15-minute fair value gap. Zooming in, I actually took this entry pretty much right off open, which I don't normally do, but I just thought it looked very clean. So we had a bunch of highs here. We took all these highs, right? Came into the 15-minute, and then pretty much right off open, the 9:30 candle. I'll just move this out of the way. 9:30 candle, we had a big push to the downside, and then as we retraced, I just sort of misplayed this. I entered in, like we displaced, came up, wicked, and I entered in off of this wick candle here. So yes, we had this fair value gap, but we also had like this inverse here. So I'll just mark that out here with the yellow. We tapped the inverse. We didn't quite tap this 1 minute fair value gap, but I just figured like it's open, market open, like the volatility, we're just gonna tap that inverse. We wicked it, and we're just gonna roll over right here. So I slapped a short here, and then since I market ordered and it, price was pretty volatile, I sort of wanted to be like somewhere in here, but I kind of got a fill that I wasn't, it wasn't too favorable. Still not a bad fill, but yeah, so I got filled here, and then I kind of just didn't want to, I wanted to like reduce my risk as much as I could, I guess. So I just put my stop right above this body of this candle, and it ended up coming up into this 1 minute right here, wicking that. This high stayed intact, and I got stopped out, and then it just completely rolled over. This was my take profit right here, right above the new week opening gap, assuming that this was going to be the draw on liquidity, and it did just that. It just rolled right over, took out my take profit, and just looking at this picture right here, I was just like, all right, I'm done for the day, because I knew right then, like, if I trade, I'm definitely going to do some stupid, make some stupid decisions, and just dig myself like a $100 hole that I shouldn't. And so literally right when that hit take profit, I just closed my phone. I was like, all right, done for the day, and I stuck to that. So um, I'm honestly very proud of myself for that, because any other day I would have been so angry and like been emotional and tried to take trades after that, but I did not. So it's not the end of the world, man. I took a $30 loss, like big whoop, right? Yeah, I should have been realistically up like $100, if I played this better or put my stop above the high. But I could have spiraled myself out of control here and made some bad decisions. So realistically, I should have just smacked a limit, put a limit order right at the 1 minute fair value gap, and my risk would have actually been smaller than what I actually ended up risking on this trade. 12.5 point stop, that's nothing for a 62 point move, 5 hour trade. Yeah, you came up, a point or two away from getting stopped out, but or you could have waited for the reaction off of the 1 minute. There really wasn't like any sort of internal model that I was a fan of. We kind of just came up, stopped, dumped. So I don't know, maybe some people would like short after you break that bearish fair value gap or something like that, but however you decided to play it, I think the best choice would have just been this right here, and that high ended up being protected and we ripped to the downside. So regardless, took the loss there, closed the charts, but I think there were some other opportunities today personally that I think were trades that I would have taken. There's plenty of trades in here that obviously had massive returns, but I would have never really taken any of these. But we come down and fill in the new week opening gap and form like a very obvious SMT with ES, right? ES right here, and then the low was in here. So very clear SMT, and then ES ended up just bouncing from this 5 minute fair value gap here, which I'll also zoom in on that after. But I think a great trade in here would have been, we had this placement up. Wasn't really any market structure shift or anything, so I wouldn't have been trading in this. But then when you come down and you hold OTE right here, right, you bounce to the upside. I don't trade turtle soups currently because I don't really have conviction with them. I never really trade them, but now that I kind of like see them, I'm trying to journal them and see when they happen to try to gain some sort of conviction to actually end up taking one of these one day. But like a scenario like this, like if I zoom into the 1 minute on both of these charts here, this is that 5 minute fair value gap. We had this big SMT here, or right there, and so we're just sort of holding this 5 minute fair value gap. And the big thing is we never ended up taking a high yet. So we put in a high, bounced on the 5 minute here, and then just consolidated. We still didn't take out this high. And on NQ, same thing. We hadn't taken any sort of liquidity from the upside after we bounced. So when we come down here, I mean, you can visibly see, like, realistically, we weren't going to take this low here. So you could have just smacked an order, you know, one tick below or whatever, or right on that low, and you know, put your stop below this low or something over here, and your risk to reward on this trade was great, you know, like, and it was just instant shot to the upside. SMT, turtle soup in OTE of the range, new week opening gap after there was an SMT here. Like, I think this is just a clean setup. I was not looking at the charts at the time, and even if I was, I wouldn't have taken this just because I don't have the conviction yet. But you know, seeing things like this, and on you know, ES as well, you're still holding that 5-minute SMT. Like, this is sort of a scenario where I guess you could just smack a long right when you see the SMT, just because you know, like, NQ already took its low. But if you watch any of my videos, you know I'm not an ES guy. Hate ES. But SMT, you know, you could have maybe looked for even an internal model, right? So zoom into the 15-second. There's no clean like fair value gap, but you know, you put in a high here, took the liquidity, bounced. So this is realistically a breaker on the 15-second right here with the yellow lines. So, and then you have like your order block right here too. So any sort of long in here, you're just holding. We even came in, tapped the new week opening gap again perfectly. Like, anywhere in this consolidation, you could have just smacked along. You know, maybe even put your stop right there. I don't know. And you could have been targeting internal high, you know, this high here as well, and it would have just been great reward. Like, that just ripped straight to the upside, and never even came back to take any low. So, you know, all these lows got put in. It just respected every fair value gap and just ripped right to the upside. So clearly that was the right side to be on in this scenario. And then throughout the rest of the day, I mean, I don't see any opportunity here. We're just ripping to the upside. You know, like, who's to say you're not going to retrace, right? There's just no setup in here. But then at the end of the day, there was a pretty clean setup, which again wasn't looking at. I'll zoom out a bit more so that you can see the SMTs. And so it was mainly from the SMTs here. So we had this swing high here that ES took, or ES did not actually take this. Yeah, ES did not take that. So I thought we had an SMT there at first glance, but we did not. Any sort of SMTs, I mean, I guess you could have used like this one, right? But I wouldn't have taken that. But there was still an internal SMT here. Now that that external SMT isn't there, I have like less conviction in this setup. At first glance, I thought that was an SMT there, but had a pretty obvious SMT here from this high to there, and then we had some big displacement to the downside. So it's just sort of the internal model, and the reason why I think it's pretty good is because, you know, you're generating this liquidity here, that trend line there, and you also have, you know, big fair value gap sitting in there. So, you know, this in itself is probably somewhat of a turtle soup entry, longing that. But you know, so you have this big displacement move here, this big fair value gap. Removing that so you can see it, and then mark out OTE of the range. We came up, you know, I mean, this could have been an entry in its own, right? Having like a 15-point stop there, just right on the 1 minute. Boom. Two and a half R. That's a clean setup right there to begin with. But you could have entered in OTE. Pretty much consequent encroachment right there, held perfectly. Maybe you could have even anticipated this internal model, because I like to see the high, then you break the high, displace, sort of like 2022 model inside of the higher time frame fair value gap. Maybe you could have just shorted this as your little, selling the stops there. Or something that I would have been more likely to do is this setup here. So after you take out this high, we formed a little 15-second. We respected that, push to the downside. There's your market structure shift, fair value gap that caused the market structure shift. Smack a short right in there. Stop somewhere above or towards these highs, and then targeting the low, and that would have been the the sniper entry right there, where you just filled in that fair value gap, dumped down. Then you could have just moved your stop to break even here and just let it ride. After we took out this low, just let it ride all the way down, and that would have been a great trade as well. So there were some decent setups today. First setup of the day was good though. I just managed it poorly, but I'm very proud of myself with the discipline. So I just got to keep that up. But let's remove all this from the charts. So at this point, we rebalance to the new week opening gap. This looks like a pretty clean buy model to go target this high, and ES really looks like at this point it wants to take out this high for real this time. So I've been saying that, but it looks like we want to have a move up to this high, so we'll see what happens. I mean, tomorrow's FOMC, so probably won't trade. Yeah, I mean, I don't know, who knows if FOMC, after the dust clears, a good setup forms, or maybe early in the morning, way before FOMC. If there's something clean, maybe I'll take it, but I don't know. I really think we're just gonna do something crazy, like chop around all morning or something, in this range here, and then FOMC comes out and we just wick here, and then have some sort of oh, that was ugly, some consolidation here, and then wick up, and then just like rip to the downside after. Who knows? Because this is looking like a an ES. You have all this low resistance liquidity here, and it's just looking like an AMD model waiting to happen here. All of this accumulation. We put in one low, one high, and ever since these 2 points, we've just been consolidating. And the day before FOMC, we all of a sudden come really close to taking this buy side. So, I mean, who knows what's going to happen, but I wouldn't be surprised if that's what we did. So yeah, maybe we have, this is your little accumulation range here. Then we have some manipulation at the highs. And then some distribution down back to the lows. So who knows? I think this has the potential. It looks great right here. Obviously you would need the structure to validate it, but I'm thinking some sort of chopping around in the morning, have your manipulation, and then just a pretty vicious distribution move to the downside. I would like that to sort of happen over the course of a couple days, but you know, it's FOMC, so who knows. But you know, I'm not gonna sit here and try to predict the market all the way, you know, to next week and whatnot. So we're just gonna wait and see what happens. But you know, that's sort of what I'm thinking of before we go into the market. So yeah, we'll see what happens. I mean, here too, NQ does look like pretty weak still, but you know, we have all this generated buy side here as well to the upside. And you know, we have these highs. We did form an SMT at the lows inside of this daily fair value gap. This was pretty much turtle soup if you're trading on the daily time frame. Right, you have this big daily fair value gap. We had the low, generated a bunch of liquidity there, took the low, boom, now we're bouncing right back up. So you know, maybe that's gonna spark the move to the upside. So regardless, we'll see what happens, and hope you guys made some money today. Hope you did well, stay disciplined, and if I trade tomorrow like usual, I'll make another video. So peace out, have a good night.